Today I want to talk about the whales investing in Bitcoin. Before that, just a couple of words about the current situation on the market. So we had this drop below $7,500 as we expected price going to this area if we will not have a rebound from this zone. But in fact, it almost didn't touch this zone, and you may treat this like a pullback from $7,500, and that was almost like an engulfing candle here with convincing upward swing. But in fact, we should be careful because, again, as I was mentioning yesterday, this may be the same trick as happened before, like for example with this resistance and then becoming support. So we tested once and then broke it. The same with this level at 8,100, so we tested as a support and then broke it. So the same thing may happen right now again. So we seemingly have 7,500 as a support, but then eventually when people will believe that this is actually a nice support, we will break it once again and collect liquidity below that. So far, I will just look at the highs which are drawn by the price and whether the price will go above this high and then potentially above $8,100 level. If yes, then the chances to return below $7,500 will be much lower. If not, then still this scenario will be pretty much possible. But today what I was going to talk about is the studies showing the accumulation of Bitcoin by huge investors, and DR made their report called Big Money Accumulates Bitcoin Driving Bull Market Return. For example, what they did is that they analyzed the distribution of number of Bitcoins on all the addresses, and for example, in the group of the addresses which are having from 0.01 to 0.1 and so on up to 10 to 100 Bitcoins, which they are calling retail size addresses, they found that from August 2018 till May 2019, when the price of Bitcoin was at $8,000, those addresses actually increased the number of Bitcoins. But then they also looked at the very large addresses, like from 10,000 Bitcoins to more than 100,000 Bitcoins, and those were decreased like by more than 600,000 Bitcoins. And they associate these addresses with the exchanges, and at the same time, huge volume of Bitcoin, like 450,000 Bitcoins, were moved to huge addresses between 1 and 10,000 Bitcoins. So one may say that the coins from the exchanges migrated to some cold storages of the huge holders. You may call them whales or just huge funds and so on. But in any case, it supports the idea that the distribution of the Bitcoins between small and big investors shifted to the latter ones. And actually, if you look at the value of those addresses, like integrated value over time from November to May, then you'll see that at the bottom, which was in November, December last year, the number of Bitcoins on those addresses increased like 50%. So that was the exact time when this happened, and then it remained pretty much stagnant after that. Also, the number of those addresses increased, again being pretty much constant until November, and then we had this rise in the number of those addresses. And finally, if you look at the distribution of the Bitcoins in circulation, then you will see that retails in principle still have almost the same amount of Bitcoin out there, like 38%, and there was a very small decrease in December, 1%. So it means that pretty much all the holders still hold, and very few of them decided to sell. At the same time, the number of the coins on the exchanges decreased from 20 to 16%, and again it happened just at the point of bottoming of the price, and basically that portion moved to the bigger wallets. So basically whales took Bitcoins from those who were trading it, got panicked at this point, and now whales don't seem to be selling those back to the exchanges, and it goes against the assumption that they actually about to dump Bitcoin once again. In fact, Grayscale Bitcoin Trust alone accumulated more than 11,000 Bitcoin in April, only in April, and currently we have 54,000 Bitcoin which are mined per month, and this is 21% of the new supply of Bitcoin. Just imagine what will happen when the halving will occur. It will be 42% of the supply, and this is only single Grayscale Bitcoin Trust. In fact, this is very interesting. You probably remember when we were looking at the Grayscale investment, which was established by Barry Zilbert. They have many interesting fun funds here, including Bitcoin Trust. For example, they also have Grayscale Digital Large Cap Fund, which includes, of course, Bitcoin, Ethereum, XRP, Bitcoin Cash, Litecoin, and in fact, it's pretty small. Assets under management, it's like $7.5 million, and moreover, it of course decreased by like 64% from the inception point, although recently, with the rise of the market, it grew like 45% in the recent 3 months. However, their Bitcoin Trust is much bigger, is like $2 billion, and was established in 2013. So you actually can look at the distribution of their trusts, and Bitcoin Trust is the biggest one. They have Bitcoin Cash Trust, Ethereum, Ethereum Classic, Horizon, and so on and so forth, and they all are like very small comparing to the Bitcoin Trust. And only, by the way, Ethereum Classic is different. It's like 10 times bigger than the rest of the trusts, which is actually pretty interesting. Keep in mind the date is of course different for different reports, so they may differ a little bit, but here is the point. The only Grayscale Bitcoin Trust has almost $2 billion at the moment, and they continue to accumulate Bitcoins. So does it mean that the price action which we see is just the huge bull trap, and we will have the dump of this because whales want to dump their Bitcoin and make a new low, make the price going to 3,000 or 2,000 or 1,000 or whatever? Is it really possible? Well, if you'll ask me, it goes pretty against the logic. But of course, it's just my personal opinion, not financial advice, guys. And there is an interesting thing about this trust. So in order to invest in this trust, Grayscale Bitcoin Trust, so it is actually OTC, right? And this is GBTC on TradingView, you can check it. You can't just take your Bitcoins and bring it to the trust. What you have to do is you have to buy a share in this trust. And you'll see actually that the price of this share is not the same as the price of Bitcoin. Now it's like around $9. So the point here is that when you're investing in this trust, you pay not for the Bitcoins in this trust, but for a share in this trust. And this share may have a different value, different price than the part of Bitcoin which corresponds to this share. So the idea is that you would have to pay for additional features like security, management, and so on and so forth. And in fact, the share cost is 0.000999727 of Bitcoin. So actually, if you will divide the price of GBTC on this value, you will get something closer to the price of Bitcoin on the spot market, but it's still $9,000. It's much higher than the current price on most of the exchanges. So if you'll compare, it's like 7,800 right now on Coinbase. So the idea is here that since you pay that premium for all the additional features, it actually doesn't really matter if the price of the share is different than the price of the actual Bitcoin which would represent this share, because still, in order to enter the trust, you need to buy the share. In order to exit this position, you also will sell the same share with the same premium. Well, actually the premium varies, and right now if you will calculate here, it's probably like 17%, so 15+%. And you can see that in December 2017, when the price of Bitcoin was about $20,000, the price of the share, if you will like do this math, will be something like $30,000. And if you'll actually normalize this to the price of Bitcoin, then you will see that it really fluctuates a lot. So it can be as 17%, it can be even 2.2x from the actual price. And now from October, November last year, we see that this premium started to grow again. In fact, some people believe that it may be used as an indication for the bullishness or bearishness of the price action. And like when this premium is really low, then it's a nice point to enter to the market. And when this delta is very big, it's very likely that the price will have a drop or at least decline anytime soon. Indeed, there is some correlation to that. And if you'll follow that, you will see that actually right now this premium dropped from almost 35% to 17%. So maybe it's not that bad time to buy Bitcoin if you will believe this indication. In any case, guys, you can imagine that people have to pay this additional premium in order to be able to invest in Bitcoin. And soon we will have Bakkt, soon we will have Fidelity, right? So you can imagine that with more and potentially cheaper options, those huge investors investors will more willingly enter the market, buy more Bitcoin, and of course it is the decrease of the supply, so we probably will see some positive impact for the price. But anyway, I hope it was useful. Let's see how the price will evolve at this current situation. Safe trading, guys. Goodbye.